Ford just recalled 548,000 SUVs because of a piece of chrome trim about the size of your hand. And here's the part of this story nobody's telling you. Ford didn't even make the part. A supplier did. That one detail is exactly why this story matters to every business owner watching, even if you've never built a car in your life. Stick with me to the very end, because the last part covers an exclusion sitting in almost every business liability policy, and it's the one almost nobody checks until it costs them 6 figures. Here's what happened. On June 11th, Ford recalled more than 548,000 Expedition SUVs, model years 2018 through 2024. The chrome trim on the center console can bubble, peel, and curl into a sharp edge. Drivers reach for a cup holder and cut their hand. Ford spotted the pattern in federal complaint data. Owners reporting hand injuries from the peeling trim. The fix sounds simple. Dealers inspect every console and replace the bad ones, free to the owner. Free to the owner, not free to Ford. Now, the detail that matters. Federal filings say the trim came from outside suppliers, and the parts were made outside Ford's specifications. So a supplier got the recipe wrong, and Ford is the one mailing letters to 500,000 owners, paying dealers for inspections, and stocking replacement consoles. That's how product liability works in the real world. The recall lands on the name on the product. Then the lawyers work backward down the supply chain to whoever actually caused it. Liability rolls downhill, and it rolls uphill too. You're thinking, I don't make cars. Doesn't matter. In a typical year, automakers alone recall over 30 million vehicles, and the FDA and USDA post food recalls almost every week. If you manufacture anything, import anything, put your label on anything, distribute it or install it, you're standing in a chain exactly like Ford's. The sauce maker using a supplier's spice mix, the boat shop installing a third-party throttle, the retailer importing from a factory they've never visited. When the product fails, the chain gets pulled, and everyone on it gets named. So check your coverage. Here's gap number 1. Your general liability policy covers bodily injury your product causes. Somebody cuts their hand on your product, that claim has a home. But GL specifically excludes damage to your product itself, and it pays nothing to fix or replace the defective products still sitting out there. The injury is covered. The 10,000 units you have to pull back and make right, that's not an injury claim. And your GL carrier knows it. Gap number 2 has a name, and your policy has it in writing. Underwriters call it the sistership exclusion. The term comes from aviation. When one aircraft crashed, its sister ships got grounded, and insurers refused to pay for grounding planes that hadn't crashed. Your GL policy uses the same logic. The cost of recalling or withdrawing your product, the notices, the shipping, the disposal, the replacement units, the overtime, all of it is excluded. Read your policy. It's in there. The fix is a separate coverage most owners have never been offered. Product recall insurance, sometimes written as a recall expense endorsement. It pays the costs GL walks away from: customer notification, shipping and destruction, replacement product, crisis consultants, extra staff, even lost income while your product is off the shelf. For scale, in the food business, the average direct cost of a recall runs around $10 million. A small company's version of that can still run 6 figures. The endorsement that covers it usually costs a small fraction of that. One more thing, and this is the part for suppliers. If you sell parts, ingredients, or components to a bigger company, look at your contract. There's almost certainly an indemnification clause that says when a recall happens, you pay them back. Ford suppliers are about to live that clause. Make sure your insurance actually stands behind what your contract promises, because signing an indemnity your policy won't cover means the gap comes out of your pocket. Your broker can match the two documents in about 30 minutes. So here's your 3-move checklist. Move 1. Ask your broker one question. What happens to my policy if I have to pull my product back? Make them show you the exclusion. Move 2. Get a quote on recall expense coverage. You might decline it, but decline it on purpose with the number in front of you. Move 3. If you supply anyone bigger than you, get your contracts and your coverage reviewed side by side. I'm Dennis Hendrickson, Hendrickson Insurance, Sarasota, Florida. Now send this to one person who makes, sells, or installs a product. Be the one who saw it first.